Greetings, I'm Shaun Pruitt, Zacks Equity Strategist, and today I'm going to be discussing stocks to watch as the Supreme Court rescinds President Trump's tariffs. So making financial headlines on Friday, the Supreme Court ruled 6-3 that President Trump exceeded his legal authority when he imposed sweeping global tariffs using IEEPA, or the International Emergency Economic Powers Act, a 1977 law intended for genuine national security emergencies and not broad economic policy. So while markets will ultimately interpret the ruling over time, some of the potential positive effects include lower input costs for U.S. companies and eventually reduced trade uncertainty. So, of course, the potential negative or mixed effects may be short-term stock market volatility and sector-specific pressure on companies that benefit from tariff protection, such as certain steel or aluminum producers that can see downward pressure as foreign competition becomes cheaper. So notably, the Supreme Court's decision invalidates the tariff imposed under IEEPA, but does not resolve whether importers will receive refunds, a sum estimated at over $200 billion. That said, here are a few stocks to watch on the positive beneficiary side of things that may be entitled to these rebates or will at least have better operating visibility going forward. And first up is Apple and Amazon. So outside of semiconductors, which were mostly immune to higher tariffs, some notable tech stocks could benefit from the Supreme Court's ruling, especially Apple and Amazon. And to reduce exposure to higher U.S. tariffs on China, Apple has undergone costly operational shifts to move some of its production to India and Vietnam, but is still paying an estimated $3 billion in tariffs under Trump's tariff trade policies. So furthermore, the de minimis exemption is expected to go back in effect, which allows low-value imports under $800 to enter the U.S. duty-free and would directly benefit Amazon's e-commerce operations. So next up is the automakers. And there's a caveat here, as General Motors has clearly faced more tariff costs than Ford. And GM has faced a multi-billion-dollar per year tariff burden under Trump's policy for a total sum that's estimated at $6.1 to $7.1 billion. On the other hand, other domestic automakers, including Ford, have reportedly thanked Trump for foreign tariffs on medium and heavy-duty sized trucks, which they believe benefited U.S. automakers. So apparel retailers such as Nike and Lululemon were also pushed to shift or reconsider parts of their foreign production due to Trump-era tariffs, and have also dealt with a significant supply chain disruption because of such. And the reinstated de minimis exemption should also help here as well. As potential by the dip targets, Nike stock is down 40% in the last 2 years, with Lululemon shares plunging nearly 60%, as you can see here, to vastly outperform the benchmark S&P 500. Next up is home builders. So low mortgage rates usually come to investors' minds first regarding the catalysts that can propel home builders, but higher material costs have weighed down their potential. So lower import costs on certain essential construction materials could be very beneficial for home builder stocks like Toll Brothers, ticker symbol TOL, and Lennar Corporation, ticker symbol LEN. And to that point, the producer price index, PPI, for construction has been at an all-time high, which measures the average change in selling prices received by domestic producers for their construction output. And there you can see the PPI for construction been at that all-time high right here. So the bottom line here is that investors will certainly be monitoring the potential tariff relief impact on the global economy, and these stocks could be poised to benefit. On the flip side, many basic material stocks have benefited from Trump's tariffs, like domestic steel and aluminum producers, and the president plans to seek other routes under the Trade Act to keep these policies in place, such as Section 122. Again, I'm Shaun Pruitt, Zacks Equity Strategist. I hope you enjoyed this content. For more, please feel free to visit zacks.com/promo.